This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Rabil with Invest Like a Pro, and today I want to build on last week. I got a question because last week I showed how to use a 1, 2, 3 to improve your entry and not necessarily wait for a confirmation of a change in trend. That's when you're using multiple time frames. So if we have two different time frames and one is showing signs of strength and I want to go down to the lower time frame for the timing, I don't necessarily have to wait for a full-fledged reversal on that time frame. So I want to show you that, but today I want to do it in conjunction in the direction of the trend rather than last week where I did it against the trend. It was more of a divergence play, like a reversion to the mean trade. This is going to be how to play a pullback trade. Now, I've done videos like this in the past. I'm going to touch on a lot of different things. If you're new to the channel, you might want to go back through some of my pullback trades because I go through a lot of detail of what I'm looking at in MACD and ADX. I'm going to touch on those things today, but mostly today, I just kind of want to show how this 1, 2, 3 pattern can be used in conjunction with, again, with the direction of the trend. I know I'm in a upper time frame pullback in an uptrend on a weekly chart, and I want to go down to the daily chart for timing. So let's go ahead and get into this example. I'm using EOG. We've had some pretty good strength in the energy stocks recently, but what I wanted to show and focus in on is this area, this pullback on the weekly chart for EOG, and that corresponds to this area on the daily. And so again, for anyone new to the channel, I use an 18 and a 40 moving average. I use standard MACD, that's 12.26.9, and then I use a 13.8 ADX, and I use the same exact setup in every single time frame, and I like to use a 1:5 or 1:6 ratio. So if I look at a weekly chart versus a daily chart, that's 1:5. There's 5 days in a week, and it's exactly 1:5. If I use an hourly, it comes out to about 1:6, 1:6.5, and that still suits fine for the types of patterns that I'm talking about on this channel. So let's go ahead and look at this pullback and evaluate it from across the board. So there's a few things that stand out to me. Number one, price makes a higher high. So I'm moving up and I'm getting confirmation by price making a higher high. And if you notice during the pullback, we have a rising 18 and a rising 40. So these are pretty critical, I would say, minimum criteria that you're going to want, in my opinion, if you're looking for a pullback. I want a stock that's trending in price and is also showing the moving averages are confirming that with both lines rising. And I also want to see the 18 above the 40. So ideally in a pullback pattern, that's what I'm looking for. Now, there are some exceptions to that, that if you know my pinch play pattern off MACD, you don't necessarily have to have all that criteria in place. But when I'm looking for a pure pullback, I want to see price making a higher high. I want to see the moving averages confirming with a rising 18 above a rising 40. And then what I like to see is MACD making a nice move, making a higher high. Now, if you notice here, we don't actually make a higher high in MACD. And in this case, to me, it's okay because we worked our way back down to the zero line. So when I see a zero line test, or if we overrun the zero line, then I'm starting over and I'm not necessarily going to compare these right away like that. So I make a move to the upside and get a pullback. I'm not necessarily worried that that's divergence because I have a reset based on a zero line test. And the same thing holds true if you break the zero line. But even if you come back and test it, I want to give these a chance to start a new trend to the upside. So I don't view that as a divergent pattern. Okay, I want to make sure that's pretty clear. So to me, this is good enough action in MACD. You got pretty good separation from the MACD line from its signal line. That is something to be on the lookout for. There's some open air there, and I do like to see that. More importantly, as this is making a new high, we're getting the ADX to move above 25 and even up to the 30 level, which is like really kind of like my minimum criteria. And we know that that's based on the buying strength because green is making the new high while the blue line, the ADX, is moving up. So we've reached, I think, another kind of minimum criteria for me. So I've got price making a higher high. I've got the moving averages confirming, and I've got ADX making a peak above 25. 25 is the absolute minimum. My preference is 30. Okay, so now I have that. Now we get the pullback. Now during the pullback, to me, it's a lot easier to evaluate this pullback by looking at the smaller time frame than to look at, there's nothing wrong with looking at the individual bars. And you want to do that to see if there's clear signs of distribution, see some big volume or something like that. But in this case, you can see, yeah, there's a big red bar, but then you had a pretty decent kind of rally bar that negated it. And then a pause bar, another pause bar, and then a little follow through to the downside that didn't have any downside follow through. And then you reverse. So is there any evidence just looking at the bars that I have enough information to make a decision about buying this? And in my opinion, it's not. I think I can go down to the smaller time frame and get a lot more detail as to what this is telling me over here on this pullback. So if we start to look at it that way, let's just zero in on this. We make a move down and then a rally up. And if you notice what's happening here, the 18 on this time frame has rolled over. Okay, so we've got rising moving average on this time frame, the key moving average being the 18 with the support of the 40. But on this time frame, going back to November, which would be really on this bar, these couple bars right here, this line is rolling over. Okay, so I don't really want to get long on a weekly chart if I'm fighting the daily trend. And this is sort of defining the daily trend, especially because the 18, which had been rising, is now rolling over. So I know I've got a little bit of time. So I don't want to just buy as it's crossing through the moving averages if this line is rolling over like that. So that's sort of case number one. Then we make a lower low. So now I've gone down, I've made a lower high, and I've made a lower low. Now, if you notice what happens on this second lower low, we get a little bit of MACD overrun of the zero line. So when I see that, I know I've got a little bit more time. Now, the other thing I can do, now that I've made a low, I rallied up, and I've made a lower low, I can draw in a trend line. And if you notice what happened, we actually did break the trend line right here. So that would have been the 1 in a change in trend. So if I'm looking at a 1, 2, 3 change in trend, I've got a move down, and I have a trend line, and if I come up through that, that's the 1 in a change in trend. And now when I come back and test the line or test this low, which is actually more important because sometimes you overrun the line and you just test this bottom, you can come all the way down sometimes, you can undercut it a little bit, or sometimes you make a higher bottom and just turn up from here. But all those constitute the 2 in 1, 2, 3 change in trend. And then coming back up through this peak would be the 3. So what I want to do now that I have this trend line in place is look and see as this pulls back. And if you notice this pullback, it was kind of violent. It had a gap involved, and we had a sell-off that went below that low, which isn't the worst thing. If it turned at this point, I would still consider that to be the 2. But if you notice, it rallied up and then it came back down and made another lower low. So I don't really consider this the 2 anymore. So what I'm going to do at this point is redraw the trend line because I know I've made another lower low. So now I'm waiting for the 1 and the 2. So if you notice, we got the 1 here, we broke the trend line, and then we pulled back. Now, this pullback can take a number of different forms. As I said, it can come all the way back down to the low. It could undercut it a little bit, or it can make a higher low. If we come back and hold the 18 like this, especially making 1 lower high, 2 lower highs, 3 lower highs, and MACD is holding its signal line, that is the 2. This is definitely the 2. And if you have MACD holding, and that's a form of a pinch, especially if the DI line is crossing above, you can play as soon as this takes out a prior bar's high. So as this bar is moving up like that, you could get long right here, knowing that I've got a good uptrend on the weekly, good momentum characteristics overall, and I'm trying to get in as this trend and this trend are starting to shift back to the upside together. Because what I'm trying to do is time the daily chart to get me in so I don't have to wait. Because if I just use the weekly by itself, I could buy anywhere in here and put my stop way down in here and let it just breathe a little bit. And the odds are, based on the whole pattern, that this is going to eventually start moving higher. But I don't want to do that. I want to wait for this to reverse back to the upside. I could probably put a stop down here, give it a little bit of room under this level, but the stop is so much tighter than it would be using the weekly. And I know that this time frame is getting back in the direction of the trend. Now notice what happened. The 18 was falling, and then where we're buying is right where this 18 is turning up and supporting the trade. So now I have a rising 18 here and a rising 18 here. But I didn't even mention that because I was looking at the 1, 2, 3. If you stick with what you're doing, look at the price pattern, and then notice when the moving average is confirming what you're seeing, where the MACD is confirming what you're seeing, where the DI lines are confirming what you're seeing, your timing is usually going to be very good, and you're not going to have to wait very long to start to see movement in your favor. And yes, you can do options using this strategy if you're using all these timing tools that I'm giving you. If you're going to play off of one time frame, I would not recommend options because it's going to take too long for it to turn around. If you buy the pullback off the weekly and don't use the smaller time frame to your advantage, then you have to use a wider stop. You have to give it more time. You don't know when the turn's going to take place. So use the smaller time frame to help you with this reversal pattern. Use this 1, 2, 3 pattern in conjunction with MACD, in conjunction with the ADX and the DI line. And I think you're going to find your timing is going to improve dramatically and you're going to see the stock move in your favor right away. Okay, go ahead and post any questions or comments. We'll see you next time.